our topic. And before we get started in today's topic, I always feel like it's important to know why you're listening to somebody, right? So Nikki's pretty bashful. But I wanted to have Nikki kind of describe why somebody should listen to us, or especially about construction and renovation.
This is my time to say why you guys should all just listen to me.
Why you should listen to Nikki.
So construction, it's my passion. It's something that I've done for a lot of my 18 years. I was one of the top construction loan officers in the country for many years running. So I have probably done upwards of 150 to 200 construction loans in my career, and construction renovation loans in my career.
Mm-hmm.
So,
and those are not like your spec builds. Those are specifically
custom, usually custom. I mean, renovations and stuff, but usually high level custom construction in like high net worth client spaces and super complicated transactions. Easy ones too, but a lot of really
because it's a different product or process when you're talking about spec. You're going out to a spec builder who you go to a neighborhood versus like somebody.
That's like a new development that you're just going to go buy a home that's already built. This is a custom product where you're the one choosing all the finishes, and you're hiring the builder and the architect, and you're paying for the actual build of the home, and you're choosing all of the stuff that goes along with it. So it's a custom construction transaction rather than going and purchasing a new home.
So
big difference.
You would say that you've been nationally recognized and you've done quite a few of these, right? And so, okay.
Yeah.
So
I get calls every day, multiple calls a day on construction transactions.
Okay. So. And you worked with quite a few builders?
I can't say. Oh, builders. Yeah, I've worked with, I probably have a pipeline or a database of probably close to 150 builders. And I work very closely with at least 25 custom home builders that do, 1 to 6 builds a year for people. And I've done construction loans for some pretty important names that I'm not allowed to say because it's confidential. But yeah, I've done some pretty cool projects.
Yeah. So listen to her because she knows and people have recognized her, right? So, so again, we're just going to get right into it.
Did you guys hear that Kevin said that I know?
Yeah, you should record that.
That you should listen to me.
Right.
He does not. So, anyways.
What are the reasons people seek out construction and renovation loans?
Really, just like we just said, to design a house. So construction loans, people are seeking out to design and build a home to your specific specifications. Maybe a certain piece of land that you want to put it in a certain place, or you want to design the home exactly how you want it rather than just going and buying an existing home.
Yeah.
And then for renovations, there's just a lot of different reasons why people do renovation loans. A lot of times it's that they're very happy with their home and they're happy with like the location of their home, but maybe they just want to add on, or they want to update. They want to add an additional dwelling unit. There's a lot of different reasons. Most of the time it's like, hey, this is the perfect place for me. I want to stay living here. I like the location, but I just want to upgrade my home.
Yeah. I've heard a couple of times in the last month or so when I get to participate in these conversations, it's like, hey, I bought my house 5 years ago. Maybe it was a 3-bedroom, 2-bath, or maybe it was perfect, but now we have to take care of the in-laws, whatever. And my interest rate is like 3% or whatever. And they're like, I'm not moving, but I'm necessitating this, either I want a pool or I want to have an ADU for my parents to come live, or, like something like that. And then, so that drives the,
that's the new way right now with everyone with the lower interest rates, are like, they don't want to move from that. They want to keep their current first mortgage. And then we're figuring out creative ways for them to make the home what they want, but allow them to stay there with their current tax bill and so on and so forth.
And we're going to give you some examples as we get later on in the discussion about like some of the actual files or transaction we're involved in right now, so that you can kind of give you an idea of what other people are doing. That doesn't necessarily mean that's what you should do or whatever, but it just kind of gives you an idea.
Yeah, I think people like close their mind off of the idea that there's ways to make things happen, like get the house that you want. Another thing that we just hadn't really talked about is sometimes there's houses out there that are like, oh, this is the perfect location, or this is really what we've been looking for, but we don't like the way it looks, or, you know, that type of thing. So you can go in and you can purchase that home and do, you know, purchase with a construction attached to it, renovation construction attached to it, and make that home the perfect home that you want. Because sometimes you're just out there looking for a home and you just can't find exactly what you want. And people don't think about the fact that you can buy that home and then do the upgrades all in one type of loan transaction. So it does open the door to, you know, if you've ever been house hunting and you're just like, man, there's 100 houses out here, but I don't like one of them. That's how this guy would be. You can actually go and like find the home, the bones, everything that you want, and then renovate it and do it all in one transaction, and make it the house that you want.
So we've had that discussion in particular with a lot of younger buyers who maybe their price point is a little lower, and they're like, hey, I go around in my price point and like houses are just either maintenance deferred or like, you know, looks like my grandmother lived in it, you know, grandfather lived in it. It's just not my style. But if you think about it, for a cheaper price than maybe you getting into something that's like a new build or something like that, or one of these, like you can go in and do a renovation, you can do a budget, you can lump that all in. And I don't think, to be honest with you, I don't know very many people who understand that process. And so
no, it's really just not widely known. It's just not a conversation that's widely known. You know, you hear all the time just about purchasing a house. And so not a lot of people do construction loans. Not a lot of people do renovation loans. And there's even less people out there that do them well. So I always tell people, you'll hear them say, oh, I do construction loans. Oh, I can do construction loans. And people can do them. But you want to just be cautious that you're dealing with someone that understands it and has the experience in it and just, you know, gets it. So you're not wrapped up in something and get some mistakes made. So.
Yeah, so just kind of like to go over that again really quickly. Like, so people do construction loans to basically work with a builder to design a home that's just specific to them, like whether it be location or they just want the bedrooms and, you know, bathrooms in their place, so they want it exactly like to their design, right? And then renovation loans again is like to tweak your current house, or like we were talking about with the young couple, or you know, or any couple for that matter, but somebody who looks at the house and is like, oh, I just don't really like it, but I want to upgrade it or do something, right? And so those are kind of the main reasons why we talk to people. Yeah. So I think the next thing that, you know, we wanted to kind of, when we were preparing for this, that we were talking about is, you know, obviously the best plan is a successful plan, right? So Nikki, what are the keys to a successful construction or renovation project in your mind?
Yeah, so you know, again, we get the calls all the time, and like there's a few things that are just like reminders. Start the process early. So if you're thinking that you want to build a house or renovate, don't wait until you're like right up and you're like, I want this to happen this month. Like the process is slower. There's a lot more pieces to it. It's not just purchasing a house. You know, if you're going to build a house, you need to have plans and you need to have permits and you need to have a builder and an architect and all these things, or a set of plans from an architect or from a builder. But there's all these pieces that move through the process that people don't know about. And so if you're wanting to just go buy a house, you know, that you can get in a transaction. We can close a purchase loan in 8 days.
Right.
But a construction loan, you cannot, because there's just too many moving pieces. So I always tell people, like, plan early. 3 months is a good time frame. 6 months is a great time frame. Some people will be planning this out for a year. It just depends on how big the project and exactly what you're wanting to do. Right. So planning early, number one. You know, doing your research. There's multiple opportunities or ways to get to the end goal. Pick a builder that can help you. You know, sometimes I think that's key. I always tell people, man, you're going to be married to your builder, because if you're building a custom home, or, you know, you're with them for 6, 9, 12, 18, 24 months, depends on how long it takes to build it. So pick somebody that you're comfortable with, you trust, you enjoy them. I can't hit that, further home than like make sure you really like your builder and you trust them.
Yeah,
and contact an experienced lender, because you can get sideways if you're not involved with an experienced lender.
Yeah, I wanted to go over the lender stuff and just saying, but so we, guys, we've actually, bought and sold a number of houses, bought and sold a number of houses. We just were fortunate enough a couple years back to be able to explore the custom construction, right? And
we're still married.
We're still married and made it through it. And but we took this very advice that we had been given to people for years, and we interviewed a number of builders, and we settled on a very good builder. And
shout out Mike Susie.
And so we were just from little things. So I'm just going to give you an example, right? Like that you would, guys, we think we can plan everything, but like I wanted, I knew hey, if you add your ceiling to be this tall, it's going to add this much.
Kevin wanted like these freaking cathedral ceilings, I swear. And, if we would have let him just design this house with an architect, we would have paid so much. I mean, we paid enough money to build it, but we would have paid ridiculous amount of money.
Hundreds of thousands of dollars.
And so the builder, when you engage with a builder first, the great piece about that is an architect, no disrespect to architects, but they're designing your dream based on what you talked about. They're not designing your dream usually based on your budget. And so when you bring a builder in, they can bring you down. So, or, keep you where you need to be. So an example was Kevin wanted these, like 10-foot ceilings, and our builder was like, that's great, but have you considered 8-foot ceilings?
We have 9-foot ceilings with these little inlets or whatever.
9-foot ceilings, because 9-foot ceilings is going to save you X amount of money because of not only the length of the wood or the structure or that kind of stuff. And we saved quite a bit of money just by making concession of a different 1 foot, a builder will help you do those things.
Our particular builder saved us hundreds of thousands of dollars with just little things like saying, hey,
no to the brick.
Well, just telling us like, hey, have you, like, certainly we can do anything you ask for, but have you considered this? And would throw things at us. And it was just amazing. So again, like, you're going to be married to this person, and things are going to get excited. So,
and then, like we said, so to wrap that piece up, start early, do your research, get a builder involved. That's what they do. And then, find an experienced lender to help you establish what budget you're looking for. I mean, that's key. You need to know how much you can qualify for or how much you want to spend.
Yeah, not just because we're lenders, but I would say you have to get with the lender so far in advance, like when you're just thinking about it, because if you go meet a builder, the first thing they're going to ask you is, what is your budget? Yeah. Are you qualified? You can't just talk hypotheticals. You really need to know what your budget is when they're sitting down and preparing to plan. So next question for you, Nikki, like obviously talking about budget and options, what are some of the, and I know these are going to be tailored to everybody, but like, what are some of the options, like lending veins or options that people can choose
from? Sorry, slow connection. So there's lots of different options available out there. Man, there's a lot of options. That's why it's good to talk to a lender. So we have the traditional type lending. So, custom construction where you're going to do a conventional or jumbo. So that just means price point we're talking about. Conventional or just a regular custom construction.
It just means traditionally that you're a regular W-2 earner, like there's nothing fancy or not to say, it's not mean. It's
you
just
can
like
be self-employed too. It's just you're going to qualify for the loan under standard traditions. So you're going to be in a traditional mortgage that you're going to be within the box of a construction. And, as we will talk a little later, the box of construction when it comes to financing and qualifying, it is a little more strict than going to purchase a home. But when people actually start talking to us, they find out that it is actually more attainable than they thought it was.
Right.
So
almost always.
Don't discount yourself. Talk to somebody and let us know. But yeah. There's government. So there's FHA, VA construction. There's renovation. They say there's a VA renovation, and I don't have a VA renovation. But usually on a renovation, you don't really need a VA renovation. So I wouldn't discount that. But there is FHA renovation, VA construction, custom construction, lot and construction together. Portfolio options. So if you don't fit in that perfect box, you have the ability to have expanded guidelines, basically, what we would call portfolios. So we have an all-in-one program that kind of attaches like a sweep bank account to it, and helps you reduce your interest on the type of program. So you pay a lot less interest than you would on the traditional construction, but the rules are going to be a little more strict for that program.
Yeah, some of our non-QM products, and like the all-in-one is specifically just tailored to reducing the years of your amortization schedule. So instead of 30 years, you could probably get it around, depends on how much money you put in the account. And it's really specially designed around your specifics. So it's hard to talk about in generalities here, but in general, the product is designed to cut your amortization or your schedule of 30 years down. And it's also designed to cut your interest that you pay over the course of the loan down significantly. Some people, we just did this recently for a customer, and they cut their 30-year amortization schedule down to like 11. And they went from paying and again, this is just an example, like they pay, instead of paying like $400,000 or $500,000 in interest, it went to like something. It's like half of the interest, right? So don't hold me to those numbers. But and the other thing about near and miss guidelines is, let's say you're an entrepreneur, small business owner, and you report significant, like you take great deductions. So then the standard conventional guidelines will lock you out, but a near miss can get you into that. So a lot of people, a portfolio or what we refer to as non-QM or near miss is like that option.
So it just means don't discount yourself. There's a lot of options. There's options for people that are very well qualified. There's options for people that are, a specific type of loan. And then there's options for people like Kevin's saying that, maybe you're a builder and, you want to build a house to sell, like a spec house. I mean, we can do those too. We can do investment homes. There's all kinds of stuff we can do. We didn't really talk about that, but that is good to know that we can do. Did you take that out? That we could do primary residence, second homes, investments. There's really just the sky's the limit. There's a lot of different options of doing things. And sometimes, to be honest, some people come to us and they're looking for a renovation loan. And they're looking to do a true renovation loan, and we look at their numbers and it's like, man, you would be better off doing a home equity line of credit than a true renovation loan because you have enough equity in your property. And we steer them direction that's going to be best for them, not best for the bank or best for us for financing. It's going to be the best for their scenario. And so there's just a ton of options out there, I guess is the point. And so some people just discount them and be like, oh, I want to build a second unit, or I want to build another property, split my property and build another home on, the additional parcel. And they just don't think they can because it's an investment, but we can do those type of things.
Yeah. So, Nikki, what are some, and again, I know we're trying to generalize so we can, because it's very specific to the program and the person and things like that, but not necessarily the person, but necessarily the program.
Yeah.
But what are some general rules that people could kind of like think of when they're watching this video that would help them know if they're qualified or not? Right?
Yeah, again, every product is going to come with a different set of rules to it depending on the scenario. So every scenario is different. A lot of times my consultations are going to be anywhere from about 45 minutes to an hour and a half that we're talking through the whole scenario so I can come up with ideas for them. General rules, we can go as low as 10% down on some of our products. So that means they would have 10% equity. 660 credit score, as low as a 660 credit score. Of course, the higher the score, the better, but don't discount yourself. Some of the products require reserves, which is like having the monthly payment set aside in the bank. Some of them don't require reserves. It's going to depend on the program that we're going to. The debt to income ratios, it's safe to keep us at like a 43% debt to income ratios, but some of them I've gone as high as 50. And to be honest, there's some programs that don't even calculate debt to income ratio. It's just based on the project itself, and it has nothing to do with the actual customer qualifying. We wouldn't even look at income. Right. So those are some different programs. And then, like Kevin's saying, we have some, he is talking about the near miss. We have some of those, like I just said, about that it may not even calculate your income into the transaction. It's about the project itself. So it's about the build, the equity you have in the build. You have to have a strong credit score. And a lot of times we won't even ask for income on those transactions. So there would be no debt to income ratios.
Yeah. So kind of, again, we know that some of the information is pretty loose, but we thought, again, this is tailored to people's specific situations, where they want to build, the state, the type of build they're doing, whether it's second home investment. So we when we were preparing for today, we thought it would be best to give you 3 or 4 examples of things that we're doing right now to kind of help people see. And again, you may not fit these, but here, just gives you an idea. So number one, Nikki, what's an example of like a non-QM or like one of those near miss, projects that you're working on right now?
So I have a customer right now that he was at a job for a really long time, and he just changed from being employed to self-employed in the same line of work. He's only been doing that for about 6 months. So traditional financing, it's going to be rough to get you qualified in traditional type financing. He would qualify otherwise. So I have to take him to one of our non-traditional type programs. And he's paying a tad bit higher interest rate, but he's going to be able to build his home. And we don't have to qualify him with income. And it's like a little bit higher interest rate for a lot less red tape. And he's excited about that. Believe it or not, some of my customers will opt for that option because they don't want to have to give me tax returns and bank statements and all those kind of things. They would rather just pay a little bit more because it's a temporary loan. This is a loan that you're going to pay, and we didn't talk about that, but we're going to, you pay interest only on the amount.
We were just going to ask. So the loans are typically the length of the build, right, Nikki? So like 12 to 18 months, and you were saying they were interest only, right? So then what do people traditionally do at the end of that construction period?
Yeah, so all of these, usually most of these programs are what we call a, construction, and then you're going to get a perm loan. Some of them are construction with a perm, but most of the time we'll do the construction, and then you're going to refinance that project or that home into a traditional financing or whatever it is that you would qualify, whatever type of loan you would have done if you were purchasing the property versus building the property. So for them, when they're looking at a construction loan in this transaction, for him to do an 18-month build with like a 1% higher interest rate during the build phase, to not have to prove everything, it's worth it to him to do that, because when the house is done, he's going to just refinance it out anyways and put it in a traditional loan.
And traditionally you have equity and stuff like that. So it's a pretty simple process to refinance.
The refinances are fairly simple as long as you're not unemployed at that time or anything like that. So yeah.
Can you give us an example of like a renovation or somebody who's like, hey, I love my house, I love my location, but I just need to like either add space or do a backyard renovation or something?
Yeah, I actually had a call with a customer this weekend, and they want to redo their backyard. And they have a few things. They want to do some kitchen and some flooring and some update like that. And they have a fabulous interest rate, and but they love their property. So actually, after talking to them, instead of doing a true renovation loan, which would then encompass their current loan and we'd have to pay it off with the higher interest rate, they have enough equity. So we're actually going to just do one of our very quick home equity line of credits. They're in a hurry. They didn't listen to us when I said, take your time. They're in a hurry. They need to get it done quickly. So they're going to call us tomorrow. We're going to do a home equity line of credit and hopefully close that in about 6 days for them so they can start the transaction. Okay. So they'll keep their first mortgage, and then we're going to do a HELOC that helps them get the work done that they want. So home equity line of credit, HELOC.
So quick shout out, how fast can we close? How fast can people have cash with one of our HELOC products?
Actually, the customer that I'm doing the custom construction, the first scenario I was just talking about, he's the fastest one I've done a home equity line of credit. And I believe we closed his in because there's no waiting periods on the home equity line of credit, we closed his in like 3 days from his, and he's very fast though. He put his application in, did his data, it's all done online, super quick and easy. He accepted his terms, and then he was signing with a notary online to get it done, and then it funded.
But standard is about?
Those ones standard, those fast ones are standard about a week, 7 days. And really that 7 days is only because the customer doing the transaction, the data in the computer is not as quick as the AI that's managing it. And so sometimes it takes a little bit for them to gather their stuff, but they're real simple.
Yeah. Did I hear you correctly that the client that you're talking about is also considering rolling up some high interest debt into their?
Yeah, so the customer that's going to do the backyard renovation, as I was talking with them, they were like, well, I can only afford this payment because of, you know, we have some high interest credit cards that we got ourselves into. And so after discussing with them, they've decided that they want to take that higher interest credit that they have, the debt, and they're going to put a home equity line of credit. They're going to encompass the build or the renovations and their $30,000 or so of consumer debt. And their payment's going to be actually the renovation and the credit card debt is going to be half of what they're paying right now. The payment's going to be half of what they're paying on their current credit card, because their credit cards are 29, 34%, something like that. So
you get a backyard and your deck paid
so yeah,
out,
and the conversation with them, and it's very conservative. I'm not asking them to cap it out or, you know, take all their equity, but they're just in a position that they needed, they had some things happen in their family and they needed to use their credit cards, and they did, and they need some work done. I think they're bringing a parent into their home. Yeah. And so they needed some work done. And so as we were talking, they hadn't even thought about that. And I think after our conversation, it just became apparent that that's what they should do. And it would help them out in their situation.
Yeah, great tool.
Yeah.
Have you ever, I'm asking this because I know the answer already, but have you?
Yes, I have. No,
can you do a land? Can you go out and like you spot a piece of land? Can you do land and a build at the same time?
Yeah, so we have land loans also. So for people that are looking for bare land to do the build on, we can do a land loan
by itself, right?
By itself, just dirt. Not a lot of people do dirt loans, but we can do a dirt loan. We can do the dirt loan, and then we can do a construction loan, or we can do the dirt and construction. Better word, land and construction. It's a little more complicated when you do land and construction. We do them. We have done them. But you definitely would want to talk to somebody about that, about what the, you know, what the pros and cons would be of each option. So, right. But yeah, we can roll it in if you have a piece of land. A lot of times what it is you're working with a builder that has a piece of land as well, and they're going to roll in their build and land together. And that works. And we can do that for sure.
Yeah.
Yeah. And we have done it.
So guys, unless Nikki has something else, I think this brings...
I could talk for days and days and days on this one.
I think it's important to just remember again that there are tons of options. Like, I mean, there's literally tons of options, and it's very hard to be general for an audience. We tried our best today to do that. But there is options, whether you spot a bare piece of land with no water, no sewage, no electrical, we can help you get that. We can help you do landing and build at the same time. We can help you
do land and put a manufactured home on it. Yeah, you know, like there's all kinds of options.
We can help you build an ADU, so then you can rent it out.
What's an ADU?
Additional dwelling unit. We can help you. You know,
a lot of people are doing the additional dwelling units right now because there's a big push to add infill. There's a big push to add more homes. So if you have a home that has the ability to add an additional dwelling unit, a lot of people are doing that because they can rent out that additional dwelling unit and provide more income for their household. Yeah. So, or put a family member in it or whatever. But there's a big push on those. We get a lot of calls for those.
Yeah.
Yeah.
So there's
lots of options for sure. Sometimes the option, honestly, when you call me is like, let's not do a construction loan. Let's do a cash out refinance on one of your other properties that you own and make it work. But it's really about talking to someone to structure you know, structure what's the best option for you specifically, because everyone does things different.
Yeah. I really think the only limitation really is you cannot really do this unless you're, well, that's not true. So there's really no limitation. But I was going to say you have to be a primary homeowner, but that's really, you have to, you can do it. It'll be your first home. You can go out and build a construction home. So.
I mean, I know getting into a whole nother level of investment stuff, but I mean, we just recently did a transaction for a customer that bought a house and did a renovation for a fix and flip on it. And so we can do those too. It's not a primary residence, it's an investment, and they were able to purchase the home, do the renovations, and then, you know, get it done and sell it.
We're not going to talk to you about that.
We're not going to do that today. It's a whole nother conversation. But I'm just saying there's just a lot of areas out there that you can do.
So guys, this kind of brings us to the end of today's episodes. We hope you've learned a lot about building and home renovations.